at the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian stocks are off to a positive start over renewed optimism on trade talks between the US and China. The dollar falls to a 3-month low while treasuries rise higher. Oil prices posted their longest gaining streak in 17 months on account of the cut in production and on speculation that a global supply glut will be averted. North Korean leader Kim Jong-un is in China to hold talks with President Xi Jinping of China ahead of a possible second summit with the US President Donald Trump. HDFC-backed Gru Finance is set to merge with Bandhan Bank in a share swap deal. Gru Finance shareholders will get 568 shares of Bandhan Bank for every 1,000 held. And the first advance estimates project India's GDP growth at for 2018-19 at 7.2%, its fastest pace in 3 years. The GVA is projected to grow at 7% this time around. Let's talk about that session in the US. US stocks extended Friday's gains to rise on Monday. They were boosted by rallying technology shares as officials from Washington and Beijing kicked off their latest round of negotiations over trade policy. Sue Keenan of Bloomberg News has all the details of that session on Wall Street in this report.
U.S. stocks rallied in the latest session on Wall Street, but gave back some of their earlier gains by the close. Tech and the small caps, the Russell 2000, were the big stars soaring in this latest session. And one strategist said that's exactly what you want to see, the risk assets bouncing higher. It was a big extension of the rally on Friday, and many investors were taking their cues from Fed Chair Jay Powell, who indicated on Friday that the Fed would be open to pausing their interest rate hike path given current market conditions. We saw oil cap its longest gain in 17 months, 6 straight days of gains on the new trade talks with China, OPEC cuts, and it is now nearing $49 a barrel. In what's being called the battle in Seattle, Amazon.com rose some 3.5% to overtake Microsoft as the world's most valuable company by market cap. And when you talk to some of the strategists on the street, they say right now it's all about the Fed, what they determine to do about the rate hike path. They say number 2 would be the situation of trade between U.S. and China, and a distant number 3, worries of the market, would be the shutdown of the federal government. In New York, I'm Sue Keenan.
All right, that's how the U.S. markets look. The Trump administration has expressed optimism of reaching what they called a reasonable trade deal with China after President Xi Jinping dispatched one of his top aides, Vice Premier Liu He, to negotiate in Beijing on a lasting truce to a conflict that has roiled financial markets. Enda Karan of Bloomberg News brings you all the details in this report.
China's deadly serious about them. They've sent their top guy to the table. And in fact, on the other side of things, we had some commentary from the US Commerce Secretary Wilbur Ross last night, who made similar remarks around he thinks there's a deal to be done. So I think the mood music is somewhat positive. Nobody, of course, expects everything to be resolved by March 1. But it seems as though, at the very least, the talks are on track and progressing, and possibly to the next stage with more senior officials.
What other signs of progress are we seeing, if any?
Well, the fact that the talks are happening in and of themselves is considered some progress, but the fact that we're now seeing Vice Premier Liu turn up to these talks, the fact that people are expecting potentially some further talks at the Davos Forum between President Trump and perhaps Wang Qishan at that summit, and there's an expectation they will go to the next level. Like I mentioned earlier, the US Commerce Secretary seemed pretty upbeat in his commentary. But there's also a view, though, even if some kind of a deal is reached, it's all about implementation. Remember, promise fatigue. John has promised much on our market access in the past. This time around, there's an expectation there will be conditions attached to any deal whereby there will have to be tangible measures or tangible ways of measuring whether or not China is implementing the promises it's making on market access, IP protection and the like.
So unlikely we're going to see anything on March 1st or by March 1st, you're saying that?
Look, I think the view is that there might be something on the goods deficit side of things. I mean, China's been fairly explicit about that. And perhaps then a broader framework for negotiating the much bigger, tougher structural issues. But I don't think anybody thinks that all of these matters can be resolved by March 1.
And certainly not in these rounds of negotiations. So it's early days with regard to those trade negotiations between China and the US, but there's positive signs, is what the report states. Let's go across now to Rosalind Chin, who's joining us from the Bloomberg studios in Hong Kong. Just taking off from that conversation about the positivity around the trade talks, Rosalind, how are you looking at Asian markets this morning?
Well, at the moment, I have to say they're looking pretty mixed, and China is not performing too strongly. It's actually both the Shanghai Composite and the CSI 300 trading in the negative right now. So I think a lot, of course, as we know, is hanging on to the outcome of these trade talks. We really need them to come with a positive outcome in order to give the stock markets here a boost. But right now, really across Asia, looking very mixed. We've got Japan trading higher. The Nikkei up by about 0.5%. The Topix up by about 1/3 of 1% right now. The yen hasn't really changed that much from overnight lows. It's at 108.56 to the US dollar at this point in time. We are seeing, though, that there has been some news out from South Korea, which is obviously going to weigh on that a little bit, on the Kospi a little bit. Right now, the Kospi is flat. So Samsung Electronics, one of the biggest components of the Kospi, reporting fourth quarter results, sales numbers actually, that were a bit of a miss. But it says first quarter looks subdued, but the second half of the year does look better. Now, the shares of Samsung Electronics did fall after that news. They then went back into positive, but now again they are flat. So investors not really sure how to take that news, because largely it depends on how the chip industry fares into the rest of 2019. And related to that, not such great news coming up from Apple. A Taiwanese publication, the Economic Daily News, reported that Apple is cancelling part of the iPhone XR orders that were delayed from the last quarter of 2018 to the first quarter of this year. Those are apparently, according to this report, being cancelled by Apple. So Apple suppliers and chip makers all being affected by this. And lastly, I just want to look at a company called Geely Automobile. That's listed here in Hong Kong, down by as much as 12% at one point, now losing more than 7.5%. And that was on a report that Bank of America, Merrill Lynch and Credit Suisse, both brokerages there, being downgrading Geely Auto, both of them saying that the 2009 sales guidance for the company was well below consensus. So that not doing so well there. Overall contributing to a very mixed picture here in Asia. We're looking for some news, investors looking for something that can really give the market a boost. Back to you.
Thanks so much for that, Rosalind. Let's turn to the trade back home. Agam Vakil is here to tell you all about the day's trade and also to tell you what's happening in the futures and options space. Well, he's speaking to Rosalind there, and she's talking about the mixed picture in Asia, seemingly a downtick for the Indian market as of now. It could all change in the next couple of hours.
It could very well could, Alex. And what's going to drive our markets is going to be factors in the domestic, arena. So we're going to keep an eye on that. Of course, we're going to start seeing earnings come through from tomorrow onwards, at least some of the larger ones. And we'll wait and watch as to how they pan out. But for now, the SGX Nifty is largely flat. What we saw yesterday in our own markets, another 0.5% gain for the Nifty, and both the mid-cap and the small-cap indices actually underperforming the benchmark indices. The banking indices also saw mixed cues, especially pressure from the PSU banking space. Of course, not related to perhaps the banks specifically, but perhaps the financial sector index. We have the merger of Bandhan Bank-Gru Finance, so that should play up as well in the markets. But let's move on and talk about your other factors. So ADRs show weakness, including Dr. Reddy's and Vedanta. Let's take a look at the other set. And we have some gains in Tata Motors, Infosys, and Wipro. Coming down to your institutional flows, we're seeing a little bit of an uptick when it comes to FII buying. So they bought around 736 crores worth on a net basis. But when contributors, we have a lot of gains from HDFC, SBI, Axis Bank, and Reliance Industries. So that's why a majority of gains coming in. But on the other hand, we had a day of weakness for the IT sector, as you can see on your screen. Infi, TCS, and HCL all declining in trade. Let's move on and take a look at how futures and options are panning out. Futures, Nifty futures, no change in open interest. But coming down to your bank Nifty, we're seeing unwinding of around 2%. So short covering of sorts. And when it comes to your open interest distribution, it's the same 500-point range. When it comes to your changes in open interest, that's where we're seeing 10,700 and 10,800 puts seeing writing and unwinding in the 10,900 call. And moving on, we have Adani Power and Jet Airways. They remain in the F&O ban. The India Volatility Index rose by 1%, but it's not as much. And the Nifty put call ratio didn't see too much movement, and neither did the Bank Nifty put call ratio, which also remained around the same level. But moving on to your other factors, we are keeping an eye on something like a Berger Paints. Look at the surge in open interest out there. 136% added within a couple of weeks into the expiry. Tata Elxsi, we're going to have earnings today in Tata Elxsi, and at this point in time, markets are factoring in some weakness in earnings too. DCB Bank, of course, was the other surprise one, considering so much traction in OI. CET and ICICI Prudential also right at the top, but towards shorts. In terms of unwinding, we have IGL, Bharti Infratel. Bharti Infratel going from strength to strength, up another 3%. A lot of unwinding coming through, though. Union Bank, Hexaware, and Amara Raja Battery. Something has certainly changed for Bharti Infratel, pardon me, because this is the one that I want to highlight. This is after a lot of days of long positions. We're now starting to see unwinding. So, well, this is possibly the old positions which were shorted, and those are now being unwound, which clearly shows the sign of strength. We'll be watching out for Bharti Infratel as well as we move into trade today, Alex.
All right, thanks so much for that, Agam. Well, let's talk about macro now and macroeconomy. The Indian economy is forecast to grow at the fastest pace in 3 years this fiscal. The first advance estimate pegs GDP growth at 7.2% in FY19. Ira Duggal reports on the growth internals and their implications.
Let me first start by saying that the first advance estimates of GDP that we get are a bit of a statistical exercise. They're based on about 7 months of actual data, and that data is available with us. So all you get is a projection of the data that you already have. Nevertheless, they're important from the perspective of budget making, because remember, these are the estimates that are used not just to calculate the fiscal deficit data, but all other calculations in the budget are based on these numbers. What do these numbers say? They expect GDP growth at 7.2%. This is in line with what Bloomberg estimated, but it's a touch lower than the 7.4% growth that the Reserve Bank of India was hoping the Indian economy will clock in FY19. So slightly softer than that. If you take into account the Q1 and Q2 numbers that we already have at our disposal, it says that the second half growth will be under 7%. But again, that is more or less what everyone was expecting. The slowdown had started in Q2. Q3 is expected to be soft because of the NBFC troubles. Plus, of course, the rural economy troubles will also continue to play out in Q3 and Q4. So sub 7% growth in the second half of the year is the message to take away from the GDP number. The GVA number is pegged at 7% compared to the earlier estimate, which was a little bit ahead of 7%. But again, more or less in line with expectations. If you look at the sectoral trend, I'll point out just two. One is, of course, farm sector growth is more or less flattish compared to last year, 3.8% in the current fiscal compared to 3.4% in the last fiscal. There is naturally a pickup in construction and in manufacturing. Manufacturing is seen at 8.3% growth, and construction is seen at about 8.9% growth. But the flip side is that we are starting to see softness in services, and DK Joshi of CRISIL has been pointing this out for a couple of quarters now, that watch what's happening in the services sector. So the trade, hotel, communication segment will grow at just 6.9% compared to 8% last year. Financing, real estate and insurance will grow at 6.8% this year compared to 6.6%. And the government spending linked public administration segment will grow at about 8.9% compared to 10%. So there is some sort of services slowdown creeping in, not clear where that comes from. But still, that is something that you want to build in incrementally into your growth projections. On the expenditure side, I think the story of 2018-19 is most definitely going to be the investment revival. Yes, you can quibble and say that this is government-led investment revival, and it is government-led investment revival, but it is investment revival nevertheless. So for the full year, the estimate is that gross fixed capital formation grew by 12.6% compared to 7.6% last year. Consumption is a little bit of a worry. Not that there's any sharp fall off in the growth in consumption. Consumption growth is pegged at 6.4% this year compared to 6.6% last year, but it stayed in that band. And as Shubhda Rao of Yes Bank pointed out, we've been in that 6 to 7% band. If you need private investment to pick up before that, you need consumption growth to pick up above that 6 to 7% band. And for that, you need some actual change in policies, perhaps the rural package that's being talked about within the government. Final point on what this means. We've already talked about what this means for the fiscal side. It will determine the fiscal deficit number from the the monetary side, I think it just strengthens the argument that there's no need for tight monetary policy right now. Inflation has underperformed, growth is softening, so why not move back at least to a neutral stance and then eventually to rate cuts.
All right, let's also talk about commodities, where oil continues to be a focus point. Yash Upadhyay is joining us to tell you all about that. Morning, Yash. What are you picking up?
Morning, Alex. So crude oil prices, they rose for a sixth consecutive day, notching its longest running streak of daily gains in 17 months as fresh trade talks between the United States and China added to optimism that a global supply glut will be avoided. Crude oil futures ended 1.2% higher yesterday, reaching their highest settlement in 3 weeks as U.S. delegations started fresh negotiations with Beijing in order to ease trade tensions between the two largest economies. That following reports of shipping data showing that OPEC is following through on its pledge to curb supplies, adding further support. On the base metal side, all of the base metal names, they ended the day higher on Monday, sending the LME metals index of the 6 main metals to its highest level in more than 3 months, as prospects of a pause in Fed Reserve interest rate hike weighed on the dollar and investors betting on a brighter outlook for China. Zinc and tin were the two highest gainers, zinc being up by about 2.5% and tin higher by 1.2%. Copper prices rose for a second consecutive day, while aluminum, lead and nickel were the other 3 gainers. Gold prices too bounced back from their first loss of 2019 on the back of a weaker dollar, and China adding to its reserves of the metal for the first time in more than 2 years. Back to you.
Thanks so much for that, Yash. Now let's see what's making headlines across the globe. Jessica Summers of Bloomberg News brings you the First Word headlines.
President Trump is to address the nation Tuesday ahead of a trip to the Mexican border as part of his drive for wall funding. The White House says he's going to meet, quote, those on the front lines of national security and the humanitarian crisis, although precise details haven't yet been released. The president's demand for $5 billion for his wall has led to a partial government shutdown in Washington.
This is not the way to govern. To pound your fist on the table, cause damage to millions of people unless I get my way. It's not what the Constitution says. You know, elections have some consequences. The president couldn't pass his wall when the Republicans controlled the House and the Senate because they knew it was a bad idea.
The House of Commons returns later with just 12 weeks to go until the split from Europe. Prime Minister Theresa May has created a special committee to prepare for a so-called no-deal Brexit. And a date for a parliamentary vote on her deal will be set on Wednesday, with a final debate next week. May has repeated that she expects further assurances from Brussels on the terms of Brexit. World Bank President Jim Yong Kim has unexpectedly resigned. More than 3 years ahead of schedule, the Trump administration questions the global lender's purpose. Kim issued a statement to staff saying the opportunity to return to the private sector is a way he sees to make the largest impact on issues closest to him. They include climate change and infrastructure needs in developing countries. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
Kolkata-based Bandhan Bank on Monday announced that it is entering into a merger deal with Gru Finance Limited, which is a subsidiary of HDFC Limited. Now remember that both Bandhan and Gru are lenders of rural and semi-urban locations. Typically, a large part of their customers come from these places. According to what the companies have said, this merger will take place through a share swap ratio, where for every 1,000 shares of Gru Finance, Bandhan Bank will be issuing 568 shares of its own. Now, according to what Bandhan Bank is saying, while this deal will help in diversifying its loan book, reducing the level of unsecured microfinance loans on Bandhan Bank's books, it will also help bring down the promoter shareholding in the bank from the 82% that it is at right now to about 61%. Now remember that according to the Reserve Bank of India's listing guidelines for new age banks, within 3 years of listing, each new age bank is supposed to bring down promoter shareholding to below 40%. Bandhan Bank was not able to do that, and last year the Reserve Bank of India actually levied some kind of penalties on Bandhan Bank. With this specific deal, the path for reducing promoter shareholding is only half complete. There is still a little left from 61 to below 40. According to Chandrasekhar Ghosh, the MD and CEO of the bank, this can be done through various measures, either through more inorganic growth, or it could also opt for an offer for sale. All of these options are open, but Ghosh did not specify which option the bank was going to take in the coming few months. For HDFC Limited, this deal is important because Gru Finance is a semi-urban and rural lender, primarily giving out home loans to customers from these regions. And HDFC itself is trying to grow this book within the housing finance company. So to avoid any kind of future conflict of interest between the two companies, according to HDFC Limited, it made sense to ensure that the merger happens with Bandhan Bank. Moreover, HDFC and Gru Finance also have overlapping territories, geographies across India, and therefore it wouldn't have made sense to merge Gru Finance with HDFC Limited itself, according to K.K. Mistry, the Vice Chairman and Managing Director of HDFC Limited. Now, going ahead, it is likely to take about 9 to 12 months for this deal to fully be complete. Shareholder approvals as well as regulatory approvals are still pending. According to what HDFC Limited is saying, it will hold about 15% stake in the entire merged entity. Remember that for any shareholding above 5%, HDFC Limited would require special RBI approval. According to the management at HDFC Limited, it will apply for these approvals, and only when it receives these approvals from the regulator as well as shareholders will it go ahead with the deal.
We evaluated various options on whether it makes more sense to merge GRU into HDFC or to look at an outside entity. And we found that a merger with HDFC would not have provided the same synergies as a merger with Bandhan Bank to the shareholders of GRU. So we have to be dispassionate at a time like this. We had set up GRU. There was a lot of sentimental attachment to GRU. We were the founder of GRU. We were the promoter of GRU. Mr. H.T. Parekh, who was a founder chairman, was the man who conceived GRU many years ago in the 80s. So there was a lot of emotional attachment to it, but at the end of the day, we have to be practical about these things. With Bandhan Bank, there was a lot more synergy. There was synergy emanating from the fact that GRU will benefit from the fact that Bandhan has a much larger platform in terms of number of branches, geographical reach, being a bank. Secondly, GRU will benefit from the low-cost funding that Bandhan Bank will have. Being a bank, it will have lower cost funding than someone like a GRU would have had. Bandhan will benefit from the fact that it does not have a housing finance business, so this is a new business which they will be able to sort of get. They will have access to the time-tested systems of GRU, which have worked so effectively over the last many years. And of course, they will also benefit from the fact that GRU has such a large presence in Western India, which they can use as a platform to distribute the other products. Also, this will create a very large, a huge lending platform for rural and semi-urban lending.
We as a bank are strategically, the beginning of the bank, we have been decided to diversify our portfolio in the three segments. One is a microfinance, which already we have 86% portfolio. We have been decided in that time we will like to grow on that, the affordable housing. And the third one is an MSME. So now we have been got these opportunities to merge with a group of finance, which is the best one of the affordable housing company, which is run by the HDFC. So we are merging on that. We feel that we can grow through the platform and the affordable housing on that. So this is a first objective. And second objective is there, if you see that our portfolio 86% microcredit means 100%, 86% is an unsecured loan, and they are fully secured loan. Our loan is in short term, their loan is a long term. So, and our portfolio is the eastern region concentration, their portfolio is a west and central. So in that sense, the geographically concentration, risks, you see that the secured, unsecured. So all together, if we see that the opportunities is very good to diversify the book for the Bandhan Bank.
Now that whenever this deal fructifies, you said that you're still awaiting some shareholder approvals as well as approvals from the regulators. But you know that 61% still needs to come down below 40%. How soon? And firstly, do you think that the RBI will be more patient with you for any further plans?
Now, if you see that the 82 to 40, of course, it is an amount is a so 50% we are now coming down by one deal. So we have a good constructive plan and strategic plan. Accordingly, we are working on that as early as possible. We like to compete on that.
Is it still an inorganic plan, or would you be looking at some other kind of sales?
We are earlier also mentioned about it. It will be one of the merger and acquisition. We have been said the offer for sale, and we other also option whatever we have and available. We try to all things in the which is the best one will come first. We will be like to go in that way.
Well, the brokerage Macquarie has maintained its neutral rating on Bandhan Bank with a target price of around 540. But according to the brokerage, Bandhan's acquisition of Gruh Finance is a wrong decision from minority shareholders' point of view, and that is because of the premium valuations that Bandhan is giving to Gruh Finance. Now, currently the minority shareholders of Bandhan will be paying 13 times for Gruh's business as against 4.5 times that they paid for Bandhan Bank, says the brokerage. Now, this deal definitely helps to bring down promoter holding, but it also results in completely avoidable dilution for minority shareholders. Now, minority shareholders are getting shortchanged with a 26% dilution in this deal, says the brokerage. Lastly, the brokerage says that they do not deny Gruh's excellent franchise and growth story, but still they cannot ignore the premium price paid by Bandhan for acquiring it, says the brokerage.
Bulk of news that we're tracking this morning. I'm going to start off with NMDC, where the board is going to be meeting today for a buyback proposal. ICICI Prudential Life Insurance, the company has reported a 9-monthly update where the analyzed premium has fallen by as much as 4.2% year-on-year basis, and the retail weighted received premium, that too has declined by as much as 10.8%. We're also looking at Sadbhav Infra Projects with Q3 updates, where the company has suggested that the toll revenue from operational SPV is up by 6.2%. Now, the number was fairly around that 12% level that we saw in the previous quarter. Also, we're looking at Mahindra & Mahindra, where the company has received an initial determination order from US Trade Commission. This relates to a complaint which has been filed by Fiat along with the Trade Commission, saying that the company apparently design features of Mahindra Roxor has infringed the IP rights of Fiat's Jeep design. And in bulk deals, we're looking at TPL Plastic, where the Bridge India has bought an 0.89% stake in the company.
There's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories on the website that you should consider reading. Here are just a couple of them. The Ahmedabad bench of the NCLT reserved its verdict on the maintainability of the bid by SR Steel Asia Holdings to retake the management of SR Steel, and will pass an order on the plea by the end of the month. And in a major move ahead of the Lok Sabha polls, the Union Cabinet on Monday, that's yesterday, cleared a 10% job and education quota for economically weaker sections, meeting a key demand of upper castes, which are a staunch BJP support base and which had shown signs of a drift from the party. A senior government functionary told PTI that the constitutional amendment bill will be tabled in Parliament today, which is the last day of the winter session. The proposed reservation will be over and above the existing 50% allocated to scheduled castes, scheduled tribes and other backward classes, taking the total reservation to 60%. Well, that's all we have for you on this edition of All You Need to Know. For more updates and news, do stay tuned over the course of the day. This is Bloomberg Quint.